Let's quickly trade this tiny account. I'm going to show you. This is of course a real account. If you don't have this option, you're probably on a demo. You should be able to see deposit together with withdrawal right there. So this is a $7 account. In case you're new, my name is Vindi. Let me know down in the comment section where you're watching this video from. I think a lot of you are from Nigeria, which is a cool thing. I appreciate you all and everyone who's watching. So if we look at this shandies right there, how can we trade a small account without sweating a lot? Of course you're gonna sweat here and there, but how can we like reduce the heart rate a bit? So let's look at this first. I'm gonna explain something very crucial when it comes to these shandies. All right, so the first thing that we need to look at is the margin. What is this margin, guys? Very important. The margin, actually, if I break it down in simple terms, it's how much is required for you to take a trade with a specific lot size. So because we're taking a trade right here with a 0.001 lot, which is a nano lot, right? Here we are required to have only $0.81. That is what the broker wants us to have in our pocket, but already we have $7, which is more than what the broker required. But this doesn't mean that we have to take more trades at the same time. This is where you guys are getting it wrong, right? Retail sales, that okay, we're gonna look at that when trade Nasdaq at 1530. All right, check out another video that I've done. All right, fine about that, okay about that. So this doesn't mean that you have to stack trades, you have to take trades. The fact that the broker requires 0.81 doesn't mean that we have to take 10 trades. We have to take one trade, hold it, so that you limit the chances of you running out of funds or blowing your account. We could have taken 10 trades and blow the account when things were not moving in the direction. That is one mistake that people make. So make sure that you only take one trade with the smallest lot, okay, and then hold. The same way you see this thing running at $25, hold, take one trade, hold. We can close it now because we've made almost, actually we've made 3 times the initial shandies. That's the easiest way to grow. You don't take 10 trades, take one trade, hold it. If it doesn't go in your favor, I'm gonna show you as to, if the trade doesn't go in your favor, which time frames should you use, where should you place your stop losses. But remember what I said, the margin is how much is required for you to take a trade with a certain lot size. So the broker only required 0.81. I only took one trade and I was like, it's okay. Check the other video where I was trading the $4 account all the way to $500. The link will be in the pinned comment section, or you can simply click here. This is where, click that thing right there, you will see that shandies. Okay, so if we look at this, this is not as easy. Disclaimer, it's not as easy as you see it, maybe depending on how you feel about trading. But you remember, trading is very risky to start with, so you need to of course incorporate risk management into this. But risk management becomes a little bit difficult when the account is tiny, so you need to of course look at certain things. Of course you also need to look at the time frames. They're gonna play a very huge factor. The time frames that you take trades on, they're gonna play a very huge factor when it comes to, they're gonna be a huge factor when it comes to your risk management. So what you want to do, you want to do this on lower time frames, very low, your M5, M15, okay, so that you do not end up risking more. So for a $7 account, you don't want to risk more than $3.2, okay, because this can allow us to at least take one trade, lose, take another trade if it's a loss, and then that's it. That's why I'm saying that there isn't enough room for errors. That is the reality of things. I don't care what you're thinking, guys. If the account is tiny, even if you are implementing risk management, there isn't enough room for errors. Do you understand? But at least try your best to wait for trades, high probability signals, okay? Try your best to manage your trades nicely. I'm gonna show you what I mean by that. So if we look at this, yes, $7, that the profits, then we have $31 equity. We can close that and close our profits and walk away, which is okay. Then the next trades will be much easier to trade because we'll be having $30 in our pocket. Do you see what I mean by hold your trades? Because this will allow us to take the next trades nicely with much comfort, but we're not going to change the lot size. The next trade that we're going to take still going to be 0.01. We don't be too quick to change your lot size. Don't be too quick to be aggressive, because then this will become small again. It's big now when we're looking at it, given that the broker only charges 0.81. But don't be too quick. The next trade, if we close this is $31, the next trade that we take, we're still going to take it to 0.01 and hold. We're not going to take 2 of them. We're not going to take 3 of them. Can you do that? Can you be able to do that? That is actually one thing, one of the things that I do to grow tiny accounts. I'm not too aggressive, but I hold this trade so that when I take the next trade, it becomes better and better. Because imagine trading a $7 account. It's hard, and that's what most of you have been requesting to say, at least to show us some of the things that we should do on a tiny account. This is hard, but when you get that opportunity to hold a trade, hold it so that the next trade that you take, you have a much better balance. Right? Should we close it? Should we close this one at $31? Okay, before I close it, let me just show you how I got the trade, because I don't want to close it before you see where the entry is. So let's quickly dive to that portion. So if I come back here to H1 so that you can see it nicely, I'm going to show you what I've done. So here we used the moving average right there, the 21 exponential moving average. That is the period, and of course right there this is exponential, the method. That's all I'm using. And what I'm doing is, if the moving average is doing that and I see a candle doing this, I don't want to trade in the direction of this thin part of the candle. I want to take the opposite direction. If the moving average is like this, again, I don't want to trade in this direction. I want to take that direction, depending on where the moving average is. So if it's here, it's acting as support, meaning I want to buy. If it's here, it's on top of the candle, and the candle is giving me a wick like that, I want to sell. Easy as that. So let me go ahead and show you what I did. I've already shown you on another video where I was trading the $4 to $500. You can check that video out. So click down when you've done with those settings. So if you look at this, the candle that I was paying attention to was actually this candle. Why this candle, not these ones? These ones were a little bit bigger, meaning the stop loss was gonna be big and probably $7. I mean, it was not gonna be very economical for me to put all that $7 to a stop loss, because this would have been a losing trade. Anyway, we are dealing with probabilities. Always remember that when you take a trade, it might win, it might lose. Doesn't matter whether you're a great analyst or your grandmother is a witch or your grandmother is what. This thing will humble you. Whether you're a prophet, whether you're what, this thing will humble you. Always leave room for errors. Okay, so if you look at this again, this is just a rejection of the moving average, same as this. Price came down and rejected here, but the rejection here is a little bit bigger for a $7 account. Again, there's another rejection and price went up. Same shanties, price rejected here, but I didn't like how the rejection was below the moving average. But this one right here gave me that rejection above this. You can see this is above, so the stop loss was initially down here. Okay, because this is smaller than this one. This one is bigger. Can you see? The bigger the rejection, the bigger the stop, because the stop loss needs to come there. So always choose rejections that are tiny, and to reduce that, you can choose time frames that are lower for better rejections that are small, because the higher the time frame, the bigger the pips and the bigger the rejections and the bigger the risk and all those things. So but this one gave me a better option to trade the bounce of this. Okay, so you're trading the bounce of the moving average. Okay, so if you look at this right here, you can see this one was tiny right there, the bounce of the rejection. You don't want to trade in the direction of the rejection. The rejection is down here, it's this portion, you want to go up. To simplify, if the rejection is down here, you want to go up. If the rejection is up, you want to go down. So let me show you. I'm just simplifying this for those who are even beginners. Of course, now I'm using hindsight. If this is the rejection right here and the moving average is on top, you want to go down. Okay, so if this is the rejection on lower time frames, you will find nice rejections here, which are represented by this. Do your back testing nicely. That will be super dope. And then this is when you get this. Oh, maybe let me just go to lower time frames to show you nicely right there. So if we come back to lower time frames, you can see that rejection right there. This is small. If you look at another one, the rejection right there, look at these rejections, you can see those ones right there, the rejected, and price started going up. Okay, so that's what we're trying to achieve with this moving average. You can see these rejections, so it's advisable for you to trade 15 minutes and low, okay, to limit this, because this is gonna give you a stop loss that is small, the stop loss that is gonna be suitable for your account size. That is what I meant by you trading smaller time frames and reducing your risk, because on lower time frames you're gonna get the same. Guys, there's no best time frame. What are you looking for? Because you'll see engulfing candles on higher time frames, you'll see engulfing candles on lower time frames. It depends on what kind of a trader are you. Are you a day trader? Are you a swing trader? But if you are a day trader, you want to look at time frames that are low. You can see another rejection here plus a bullish candle. This one is an engulfing candle. I like it. I also highlighted it on the previous video, so you can see this particular shandies. Alright, okay, so the stop loss gonna be at the end and then you hold. Okay, so if the rejection is here and the moving average is here, you wanna go up. You don't want to trade in the direction of this rejection, because sellers got rejected and then you want to be a buy. Okay, does it make sense? Let me know if it makes sense. Drop a comment down in the section below. Check the other video. I'm gonna pin it down. The first pinned comment, that will be the other video that I'm referring to. I'm still going to continue trading that account so that you get to see it, and I'm gonna trade this one as well. Watch out for the next video that I'm gonna upload. It will be the same shandies. We'll be continuing to trade this particular asset. Okay, so yes, maybe it's time for us to close this so that we lock in this this profits. All right, let's close the position and lock that profit entirely. Okay, so now let me explain what I was saying. Now we have $29. We no longer have $7. We have $29. What does that tell you? What does that tell you? We have more room. Now we can trade again with 0.01001, taking one trade. The number of trades that we're going to do, we're gonna continue taking one trade. Alright, but now we can risk $5 per trade. You can look for trades that are gonna cost us $5, because now we have more. We no longer have $7. It wouldn't make sense if we were to risk $5 on $7 account. We'll be risking almost 80%, 75% of our account. But now that we've held that trade, this is where now it becomes much easier. But now having $29 doesn't mean we need to pump up the lot size. That is where you guys get it wrong. We don't have to pump up the lot size. The next trade that we're going to take needs to be a low risk kind of trade. Again, that's how we're going to build it, because it might lose, but if it lose, we'll get negative $5. We're just gonna still have $24 for us to trade again tomorrow, because losses are part of trading. Don't make blowing part of trading. Blowing is not part of the learning process. Just simply understand risk management. Don't make blowing a habit. That's what I'm saying. So we're gonna continue looking at this once more. This is a real account. We can simply click on withdraw or deposit right here. Okay, so let's just shut this thing down. Let me know if this is a cool video and where you're watching from. Again, my name is Vindi. Always be safe and make sure that you trade with a stop loss. Otherwise, you know the grill. Sharp. That's the sharp to say goodbye.